And now we've got a series of higher lows, a series of higher highs. And I think we're going to see the dollar continue to push up to about 121, potentially even go a whole lot higher. Continue to act. Now, it's not going to be a straight line. I do believe that there's going to be all kinds of pauses and it'll take its time to get up there. But as things fall apart, I think the dollar is going to shoot up into kind of crisis kind of scenario. Once that's done, I do believe we'll go into a huge crash again, like we saw over here. And that's when I think precious metals and miners are going to like absolutely go ballistic. So till then, this rising dollar environment is going to hurt the market. And as you were just saying there, James, when we look at the different currencies here, the US dollar is the only one going up. The rest are in free fall mode. Canadian dollar just bouncing bottom, probably going to go even lower.
The dollar is expected to rise, potentially reaching 121 or higher, driven by a crisis scenario as other currencies fall. While the rise won't be smooth and will involve pauses, a significant crash is anticipated once the dollar peaks. This will likely trigger a surge in precious metals and miners. Until then, the strong dollar will negatively impact the broader market, with currencies like the Canadian dollar set to weaken further, significantly if oil prices decline. ChrisVermeulen, a trader, investor, and founder of the Technical Traders, explains that the long-term market outlook remains bullish, as the broader trend since the COVID crash shows a rising tide despite some pullbacks. However, short-term signals indicate caution, with money moving out of equities and into safer assets like gold and the dollar. The NASDAQ's short-term trend has turned bearish, suggesting a potential drop of 4 to 5% in stocks. ChrisVermeulen recalls that historical patterns in the S&P 500 show that market dips during long-term uptrends often lead to standout lows driven by short-term cycle resets and panic selling. Mixed signals in economic data and charts emphasize the need for careful strategy and time frame selection to navigate these volatile markets. Let's dive into the video for more insights. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates.
If you want to go longer term, the weekly chart here is a very good view of the longer term. And as we've mentioned before, the key to success in investing is to hold assets that are going up in value. And so after the COVID crash over here, the market was in a rising tide environment, a bullish environment. And then 2022, we went into a falling environment. We are still, from a big picture view, we are still in a bullish phase. We've had a pullback. There's a little bit of weakness. What is happening underneath the hood of the stock market and all the data is actually very similar to this move right over here. So I think we are on the cusp of another mini bear market, or potentially something a whole lot bigger. I think it's eventually going to get much, much worse than 2022. But that's kind of where we are. We're still bullish longer term, but when we zoom into the shorter term charts and look at like the NASDAQ, for example, this is the NASDAQ kind of short term trend charts. We have gone red and the trend is down, and we're seeing money kind of starting to move out of the equity space. And we're starting to see kind of gold hold its value. We're starting to see the dollar move up. People are looking for safety. And so there's a mixed signal. Long term, you're still bullish. Short term, we got to be very cautious. We don't really want to be holding stocks because they could fall another 4 or 5% very quickly here. And if we look at a kind of, this is the past year of the SP 500, there is a very interesting setup unfolding. So where we are right here, we also had a setup over here, another one back here, over here, and then this one over here. Now, what's interesting about all of these, because we are in a longer term uptrend, these dips tend to be standout lows, and it's hard to see, but there's this red indicator on the bottom. These red indicators here tell us when there's a reset in the financial system, a short-term cycle reset. So this is when multiple cycles come together. They create a cycle low. There's usually panic selling in the markets, and it creates these standout lows. So we have to just see what's going to happen over the next probably week or so. This market could have another push higher, and the NASDAQ has about 11% upside from where it is for one more kind of hurrah, one more push up. SP 500 could go about 5 or 6 or 7% to the upside as well. So there are mixed signals, just as you were saying, James, with all the economic data. Some people are super bullish, bearish, mixed signals with the data itself as well. So are the charts, and that's where we have to step back and pick the strategy and the time frame you want to focus on, and make sure you navigate these markets accordingly. The markets are not easy, but you definitely have to pick strategies and time frames and try to focus on those, not get caught up in the daily news and chop of the markets.
In his recent interview with Jimmy Connor, ChrisVermeulen highlighted that high interest rates and low unemployment make investors nervous. Staying at elevated rates discourages stock market and real estate investments. Many prefer safer options like earning 4.5 to 8% with minimal risk. Rising rates could significantly hurt the stock market and real estate, with the potential for the 10-year yield to climb as high as 8.34%. This scenario could lead to significant market disruptions, as high returns in safe investments would outcompete riskier assets. While some believe political figures like Trump could prevent this, economic cycles and global sentiment are too powerful to control. Financial resets like the tech bubble or the 2008 crash show that once the momentum builds, interventions may slow but not stop the impact. Chris exposes that the US dollar, as the global reserve currency, tends to surge during global economic instability, as seen during past crises like the tech bubble and the 2008 financial crash. The dollar is on an upward trend, with expectations to reach 121 or higher, though this rise will not be linear. Once the dollar peaks, a significant crash is anticipated, which could trigger a major rally in precious metals and miners. Meanwhile, other currencies like the Canadian dollar are weakening, particularly as oil prices decline. The Canadian dollar may eventually recover, but the US remains the dominant currency. Now, let's dive into the interview.
Sure. I think the low unemployment rate, and the rates, the interest rates not really going down. I think that has got investors nervous. If interest rates are going to stay high, then a lot of people are very nervous the stock market is topping. A lot of people missed last year's rally because they were too worried about it topping. And high rates mean, hey, well, I can just get out of the stock market and I could move into somewhere with no downside risk and take my 4.75, 4.75% and have zero risk and sleep at night. And that's going to be kind of like the same for I see it kind of as the real estate market. If rates are going to stay where they are, like the 10-year yield, 10-year note, I did some Fibonacci on it the other day, and it shows that we could go all the way to 8.34% to the upside. And it's crazy if interest rates go that high because that's going to kill the stock market, I think. And why would you want to own real estate if you can make 8% in the bank? I'd much rather just liquidate everything and make 8% safely in the bank until the markets reset and then reinvest. So this worry about rates not dropping, and there's also lots of people talking about rates going up still, is going to wreak havoc on the real estate market, on the stock market. I mean, things could get really ugly this year. And of course, we just have to see how things unfold. And I know a lot of people keep telling me well, Trump will never let that happen. He's got too much real estate. There's no way rates are going up. But I think people need to understand just one person can't control the wave and the mentality of the world. Like once these big cycles take place, these economic cycles, the ball starts rolling, one dude with a couple policies isn't probably going to be able to stop it. Whenever we go into a financial reset, whether it's the tech bubble, the financial crash, you can't stop a train like that. You can cut rates to try and slow it down, throw some stuff at it, but overall, when the economies turn and have a change of attitude and start moving their money where they want to, I don't think the Fed or the president can stop a tsunami when it happens. It's still the reserve currency. When all hell breaks loose around the world, people naturally gravitate to the dollar. We saw the dollar skyrocket during the stage 4 financial crash that we had, the tech bubble. We saw the US dollar percentage-wise. There was another huge rally during the 2008 financial crisis. Whenever there's some strong weakness in the economy, like we had, I believe the stock market was very close to actually topping in 2015, 2016. And Trump ended up stepping in as the president and sparked a big move to the upside when it comes to that. So it kind of saved things. But overall, we've gone from the dollar moving down. It's put in a major bottom here. And now we've got a series of higher lows, a series of higher highs. And I think we're going to see the dollar continue to push up to about 121, potentially even go a whole lot higher. And it's going to continue to act. Now, it's not going to be a straight line. I do believe that there's going to be all kinds of pauses and it'll take its time to get up there. But as things fall apart, I think the dollar is going to shoot up into kind of crisis kind of scenario. Once that's done, I do believe we'll go into a huge crash again, like we saw over here. And once it does top out, that's when I think precious metals and miners are going to absolutely go ballistic. So until then, this rising dollar environment is going to hurt the market. And as you were just saying there, James, when we look at the different currencies here, the US dollar is the only one going up. The rest are in free fall mode. The Canadian dollar just bouncing bottom, probably going to go even lower. When oil breaks down, which I think is just a matter of time, the Canadian dollar is going to fall dramatically again. And we're kind of tied to to oil to some regard. And when we look at the US Canadian dollar conversion, like one US dollar right now is about $1.43. I believe, based on Fibonacci in the chart pattern here, that we're going to about 174, which will be ludicrous. Like, I think we're going to see some pretty huge changes in everything. I think we're going to 2 years from now, we're going to look at the world and be like, holy cow, have things ever changed? So that's kind of my scenario for the dollar. Is bullish dollar, and more or less you want to hold US dollars or own the US dollar index. And at some point when it does top out, it'll be like, get out of the dollar and probably move into a resource heavy currency, which I believe the Canadian dollar will probably rise from the ashes and actually become move everything back into Canadian dollars to catch the strength there.
The market is facing a mix of caution and opportunity. While the dollar is expected to rise significantly, driven by a crisis scenario, this will lead to a broader market downturn. High interest rates and low unemployment are making investors wary, with safer investments outshining riskier assets. The long-term outlook remains bullish, but short-term volatility and potential market disruptions require careful strategy. As the dollar peaks, a surge in precious metals and miners could follow. But for now, the focus is on navigating the challenges of the current environment. How should investors adjust their strategies in the face of rising interest rates and a strengthening dollar? What key factors could trigger a shift from the current bullish outlook to a market downturn? We'd love to hear your thoughts in the comments. If you found this video helpful, give it a thumbs up and subscribe for more updates. Thanks for joining us on this journey.